The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tommy O'Brien, and Darrell Martin.
Welcome, folks. Tommy O'Brien. We do appreciate you growling and prowling with us out here. Right now, we have the Dow down 23, Nasdaq off 8, S&P's down $1.50. We have the gold contract trading up $8.60 at $1,358 an ounce. Silver is up 16 cents at $20.18 an ounce. You got platinum up $3 at $11.42. Copper is down 3.5 pennies at $2.16 a pound. The light sweet crude's up 45 cents at $43.94. Bonds, can't keep them down, man.
Bond action.
You have the 10-year up 25 ticks, 132.26. The 30-year up 1 point and 30 ticks. And remember, folks, it's 32 ticks and a point, so it's almost 2 full points. 173.22. And King Dollar. King Dollar's down 398 ticks, 95.44. Retail numbers come out. Had some action out here.
Yeah, 8:30.
Yeah, and they were, it's interesting because they weren't that bad at actually. The numbers were on par. I think what the market is really trying to digest them, but everyone's buying cars.
Okay.
It was a lopsided deal on cars because it's probably free money.
Okay, sure.
Versus, clothes and
sure.
all of this, So, folks, if you haven't test drove the Nadex platform yet, great time to do it. You can come over to our website at TFNN. You'll see the banner on the top of the side. Hit the banner. They'll bring up the exchange and put $25,000 of paper money into your account. You can come along with us and see how these contracts trade.
So we were just looking at gold beforehand. That's quite a move that's at this morning.
It is.
And that's coming off those 8:30 numbers. Right?
Yeah, absolutely.
Yeah.
Now, watch. If you look at this, now this is going to be really intriguing because the last 3 days inside the gold market, it sold off.
Okay.
And I was watching this as it was going up today, and what you have, so this is pretty intense. And particularly because on a Friday, it's more intense. Because in the gold market, folks, they can do some damage on a Friday. So when you look at it, the high that was generated Wednesday was 1363.60. And then they sold it down, and we closed at 1351. So you get some real price spread there, right? Yesterday, it wasn't bad. Yesterday, you had the spread from 1341 to 1359 to close at 1350 in the middle of the spread, which is pretty good, actually, okay?
Yep.
But what happened is that the gold equities didn't perform yesterday. They were up good, and they sold them off, right?
Okay.
So this morning, because it couldn't get to the 1363, that's like, I'm looking at this and I said, you know what, man? On a Friday, the probability is pretty good that, number one, it may not make it. Number two, though, they may sell it off again. Okay.
And we already made it to 62.50, right? $1 shy.
Yeah.
Today. Yeah.
That means that someone's laying up there, saying, okay, you can have as much as you want. Do you know what I'm saying? And those two areas, folks, are important. And the reason they're important is that when you come over, gold made a top on July 5th, okay, at 1384. Well, the first sell down is what it's going into, which is 1366 to 1388. That was on July 12th, right? And then when you go over again, and it's going to be the sell down from last Friday, I believe. That is a classic, like someone is in there saying, okay, I'm going to sell this thing down.
At that level, sure.
At that level,
sure.
And we'll see how this shakes out. But
yeah.
You definitely want to put into consideration that you have a Friday here. And if we go over to the dollar index, and this is where there's large opportunities inside the Nadex platform, folks. You take a look at the dollar. What you have with the dollar, as you can see, that's rejected lower price already. And when you look at it, that also, just the opposite, is pretty cool, isn't it? That didn't make it to the lows either.
Sure.
Isn't that wild?
Yeah.
So, and as we're talking right now, there's some movement out here. You know, there's
Definitely. There's movement in a lot of places, right?
Oh man, and we're at highs. The bottom line is that we got the highs yesterday.
It's a pretty cool statistic. It is. All three major indices closing for the first time since 1999.
I heard that on the way home last night.
Yeah.
That's pretty intense.
Yeah. I guess they all got to align like that, right?
Yeah, no, I'd agree. That's real harmony when that happens.
There you go.
Do you know what I'm saying?
Totally.
Now, hopefully, folks, okay, you don't want the replay of 1999
So keep in mind what happened in 2000, right?
Yeah.
Yeah.
Right. And do you remember we were having a big New Year's party?
Okay.
Yeah, January 1st, 2000.
What?
The
New Year's party?
Yeah. How did you forget it, right?
Sure, of course. Oh, yes. Okay. I thought we were still talking about the market.
No, I was going to talk about the market because what I realized at that New Year's party is that what happened is that there were a couple people that were there, and it was JDSU. They were up like 200 or 300%.
Of course, you were talking stocks on your New Year's Eve party.
Yeah.
Of course.
And they wouldn't sell it. And
okay.
I'm saying, you're up 200 or 300%. You got to get rid of this thing.
Sure.
And they're saying no. And all of a sudden, I realized that I says, oh my God, like this is like insane.
Yeah.
Because you don't get up 200 or 300%. And it was in 6 weeks.
Right.
It was in 6 weeks.
Yeah.
Because JDSU folks went up something like 240 points.
Okay.
In 6 weeks.
Yeah. Wild.
And here, watch. You got to look at this because this was one of the weirdest moves. Oh, look at. It's not even a stock anymore. Oh, you must have taken it over. Hey, you stay right there. We're coming back. Our phone number, folks, is 877-927-6648. Dow Industrials right now down 12. Nasdaq's off 6. S&P's down 1. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And we were talking about 1999 and JDSU. So JDSU, they changed their name. The ticker symbol now is VIAV. But if you're watching Tiger TV, you're going to see what type of rocket ship this was both ways. So September of 1998, it's trading at $21. March of 2000, it's at 697. At some point in March, and then at another point in March, it's at 491, and then April goes down to 322.
332.
332, and then it goes down to $9.
Just to point, it shot back up though. You missed.
Yeah, then
that's the real kicker.
No,
then it goes back up to 639.
639. That
Before
was
then,
in
it just
July.
falls apart.
Exactly, yeah. And then see, you don't want to be pretty intense, man.
Yeah.
Pretty intense, no doubt about that. So if let's go over to the let's go look at that gold contract. So gold is trading out right now at the. And I mean, if you're trading a gold contract, folks, you'd be trading the 130 contract when the pit closes. That's how this works inside the Nadex platform.
You would, unless you're trading the hourlies, right?
Yes, yes.
But yeah,
right.
if you're trading like a daily,
right.
they expire
right.
at 130 on gold. I think it's 230 on oil. Same thing,
Yeah.
just with whenever the pit is expiring.
And boy, there's been some volatility in oil. Holy cow.
Yeah, totally. Some amazing volatility.
Yeah.
I think we were at 41 something yesterday as overnight.
Okay.
And then this morning we were above 44.
Yeah.
So like 41.15 to 44, and it's been about 24 hours.
Pretty intense, man.
Pretty intense. I filled up my car with gas on the way to work, and
Did you?
it felt like I was paying more than I used to.
Oh.
Yeah.
Okay. Yeah. So we're trading at 1358. Let's see so over here 13. You get a 1375, which is the top, and 1325 to 1375.
And what would you be looking to do here? You just going on either side? I mean, what's nice is, so if you were going to go bearish,
Yeah.
I would like this trade because you're going to have the risk reward in your favor and not be paying a dramatic amount of premium.
Right.
Right? Like your max loss, it's almost a 2-to-1.
Okay.
Where you're risking 1 to make 2. You're
Yeah.
risking 160 to make about 330.
Right.
And for that, you're selling it right now. I mean, you can see basically the market's just oscillating right around where the indicative index is, which is where gold is.
It's pretty amazing, actually. isn't
Yeah,
it?
so there's almost no premium. Really what you're just paying is the difference between the bid and the offer.
Right.
So
Yeah.
with that in mind, if you're bearish and you happen to get a huge move, then
Yeah.
having a 2-to-1 risk reward in your favor without paying any premium is a good trade. On the reverse side, I don't know if I would do that trade if I was bullish, unless it was going to be really short term and I'd be in and out because
Yeah.
it's trading with the market.
Right.
But if you had a plan to maybe just hold that and let it go for the day, you just want to be aware that you're not really getting a lot of premium if you were going to be buying that, because you're buying it at 58.30.
Yes.
Your max profit's 75,
Right.
and then your max loss though is at 25.
Right. So you'd go up to probably the next one. Let's do the next one, the 1350 to 1400, right?
You could do that if you're bullish.
If you're
yeah.
bullish, you'd.
And I anticipate there'll be at least a little premium in this one. Oh. Let's try that again. Maybe it's too sweet of a trade. They're not going to let us pull it out. I mean, I don't know what's going on with the ticket. We can see that the bid offer right now
Yep.
is really, that is a nice trade, even just going off what this is.
Yeah.
And, 1357.9 versus 1358.4, so you're getting in at 1358.4, which is literally 330 cents above the market.
I know, which is dynamite.
Which, yeah, and your loss would basically limit it to the $84, which are with the max profit of what, $416.
So when we're looking at those right now, it looks like that the market makers have basically said that the volatility is out of the move, right?
Yeah,
that the move is taking place.
As in the market is basically pricing in that the $8.40 that you have to the downside is basically probably enough, because that's all the upside that you can reasonably expect for the remainder of the time.
Right. Right.
And that might be right, as in we're approaching 10:30, you have 3 hours left.
Yeah.
This has digested some news for the morning already.
Right.
And it looks like it's found a little bit of a zone in between 1356 and 1361.
Right.
So all
now,
this
is it saying, okay, so when you said 1361 and 1356, would that really be saying that that's the zone we're going to stay in, right?
I'm just looking at the chart right here. But
right.
This is, what's going on is it's as it becomes more and more expanded, right? Like, let's say the market had dropped down to 1351.
Okay.
Then there's definitely going to be a little premium in there for the 1350 to the 1400.
Right.
Because they're not going to give it to you for $1. Right?
I see what you're saying now. Okay.
But because there's $8.50 to the floor, that's a reasonable expectation that realistically
they can cover themselves on both sides.
Realistically,
of that.
$8.50 risk to the downside is an equal amount that you could ever reasonably expect on the upside until expiration.
Right. Okay.
Yeah.
Okay.
And that's why really this one especially, because you're dealing with almost $17 if you were going to be bearish, right? If you were getting in at 1358, your exposure was up to 1375.
Yeah.
Well, they're comfortable, but the market's comfortable basically saying that the volatility expectation, you have $17 of risk to the upside. There's probably just as much risk to the downside and no more, as in gold dropping $20, $25 from here.
Right.
Very little. So there's not going to be premium on that side, because guess what? Nobody else would take the other side of that trade if they had to price that premium in.
Which is pretty, Right. So that, as we're coming through this hour, we'll keep our eye on that. But that's pretty cool, man. If we go into the NDX 100, now, when I was looking at the NDX this morning, and I'm saying, that failed yesterday. It's like, okay, does this thing want to go south? And, you get the first leg down actually, no, this leg down wasn't when the numbers come out. That's the numbers. No, that was before the numbers. Yeah, it was the numbers. So when the retail numbers come out, it went from 4,800 to 4,796, and that's just kind of oscillating there too.
Yeah.
Yep. Yeah. So it's Friday, end of summer, at highs.
Yeah.
There's not a big reason for any of these big operators to
I think those retail
out.
Numbers came out and there wasn't anything too jarring, right?
No, there was.
The market reacted, but nothing that would send it to a tailspin or the other way around.
Right. See, so check this out. U.S. retail sales.
They stalled a little bit. There was.
Yeah. U.S. retailers were little changed in July as Americans flocked to auto deals at the expense of other merchants. The stalling of purchases followed an 0.8% gain in June that was stronger than initially estimated. Commerce Department figures showed Friday. The medium forecast called for a 0.4% rise in July, excluding cars. Sales retreated 0.3, the most since the beginning of the year. You stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. Be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances.
Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 23. Nasdaq's down 6. S&Ps are off $1.50. And let's go look inside the Dow and see what's moving out here. So Exxon is the mover. That's up 0.9%. Procter & Gamble's up 0.6. McDonald's up 0.4. Coke is up 0.3. Taken away from it is Microsoft's down 0.9. Pfizer's down 0.8. Goldman's off 0.6. Let's just go over to Exxon for a second, because Exxon was coming down with some big volume. Tuesday goes up yesterday. This is, so let's see. You're going into 3 million as well as 7 million. So Exxon is building cars to go downtown once again. Inside the NDX 100, what do we have? The mover out here is NVIDIA. That's up 3%, 197. Micron Tech's up 2.4. JD.com's up 2.2. Akamai's up 1.7. Taken away from it is Mylan Pharmaceutical is down 1.5. Adobe's down 1. And let's see, Regeneron's off 1 also. Not a lot of movement out here, man. People
pretty calm after those 8:30 numbers and everything that happened in the following about half hour, or even for the open.
Right.
Yeah.
And the volume yesterday, folks, was anemic. Okay. Bottom line, you're at high price, though. You know, you did 781 million in NYSE. In the Nasdaq, just 1.5 billion, which is really unusual in the Nasdaq. That's, you know, bottom line is that the composite itself, you know, should be banging out $2 billion up here at these highs.
Yeah.
But guess what? You keep crawling up little by little.
It'll be interesting to see how everything plays out with, the NASDAQ 100, all the big tech stocks.
Exactly.
And then as you trickle down to like the broader indices, the S&P 500, the Russell.
Right.
Because I imagine Amazon, Facebook, Apple, they're going to be doing just fine for the foreseeable future.
Yeah, they are.
Yeah.
It's so funny about that on the way in. Again, as soon as we get off, I got to jump on Amazon and buy a few things.
Nice.
Well, it's amazing. Like, I was working out with Nico this morning, and we were talking about it's so easy.
It is.
It's like it saves you so much time.
And
All
they've
of the
built
above.
up that distribution network where
Right.
we've become accustomed to 2-day delivery, where being a normal company where you just want to ship something and you want to ship it affordably so you
Right.
can compete on price with Amazon.
Right.
And you have to do it to like 5 to 7 days maybe, and then the returns aren't as easy. Maybe the customers have to pay for the returns, whereas Amazon, it's much easier
You
most
get
of the time.
You get the thing right with it.
Yeah.
And what's wild is that what I'm going to buy a couple shirts, right? But I know exactly what I'm buying because I already have these shirts and I just had them for a long time. And so I went on last night and I said, oh, they're right there. So
It's perfect.
It's like
as long as you know what you're buying,
Exactly.
and it's uniform, right?
Yeah.
You know what? It's perfect.
Isn't that crazy?
It is.
I know. Let's go to our man Tom in Plymouth. Hey, what's going on, brother? We want to come down Plymouth and have a few beers with you overlooking that nice harbor.
On a Friday afternoon
Yeah, totally,
in
man.
August.
Totally.
Totally.
Yeah.
We might have lost him.
He'll be back.
He's probably too excited he blew the line out. What's
He's either into the JDST or he's looking to get into it. Let's take a look. CAD. Now, so what has happened, folks, the last 3 days is that this trade has been pretty cool. This is open down. Now, this is the direction 300% bear position of the market vector junior gold miles index. And what has happened,
I think he's back.
We got him. What's happening, brother?
Hey, how you guys doing this morning?
Morning,
Doing
Tom?
great. Yourself, man?
I'm doing fantastic.
Cool.
Perfect.
So,
Hey, I'm looking at the JDST. I've been buying it all the way down here. I'm wondering what you think.
yeah, it's been dangerous the last 3 days, but the last 3 days it's worked out. Anyone that's got it, because what has happened, folks, is that so if we go back to Wednesday, it opened up at $3.81. It goes up to $4.17 and closes out at $4.04. Yesterday, it opens at $4. It goes down by 11 in the morning to $3.81, and then it closes at $4.14. This morning, opens at 380 again, and we'll see where it goes. But what is happening is that they continue to sell off. If I go over to JDX now,
GDX.
the GDX, thank you. What you're going to see is that this is pretty intense if you basically are a technical person. Okay, so the first high on August 2nd, 3164, you did 68 million. We tested that Wednesday with 56 million. It failed. We tested it yesterday with 48. And we're going to have another test today. Now, what happens, folks, also is this. So that's technically. Fundamentally, I do the gold report. So inside the gold market, I trade technically, but I know the gold market fundamentally too. So what happens, which is really cool, is that you always have these 13F filings, which is 45 days after the end of the quarter. So they came out yesterday. So I start going through them yesterday, right? And what happens, folks, is this. So if I go over to Rangel Resources, what you're going to see, and if you take these apart, folks, you just get another basically pretty good understanding whether big funds are buying or selling it. Now, what you don't get is that this is still old information because all of this was done prior to June 30th.
Right.
It got released yesterday, okay?
Sure.
So when I go through this, if you're watching Tiger TV, the Van Eck is not a big deal, okay? Because that is an ETF. They have to buy and sell these every day almost, okay? What is a big deal is that inside Rheingold, it's like, okay, so Fidelity is still a buyer, so that's positive for Rheingold, okay? We put this up, and you can see, if you're looking at Tiger TV, you want to look at the latest changes, but then what is the file date? The 6/30 ones are Well, I think they're important ones anyway.
And the most recent, of course.
Most recent. Then, if you put up, okay, the cells, you can see that it's not bad. Rheingold doesn't tell you a lot, right? Now, watch this, though. And we knew that something was wrong with Goldcorp. When you put Goldcorp up, what you're going to see is that I'll put the latest changes up, and, you know, bottom line is at 630, you got Schroeder Investment buying, you have Emerald Acquisition buying, you have Great Western buying, but watch when I put the cells up. It's freaking intense. And where it comes down for me is this Fidelity. Fidelity sold 3.3 million shares. They had 18 million left. They're one of the largest owners. You get another 3 million right underneath it. You get another 2.5 million underneath it. You got it goes over and over again. Now, I'm not going to go through all of these, but that's what I was doing last night. And as I was going through them, what I saw, I didn't like how much Fidelity was selling.
Okay.
Because Fidelity's dynamite when they're buying, but when they're selling, it's like, oh no.
Yeah.
They're the big dog, man. So I think you get the big dog right behind you on this JDST, Tom.
I'm hoping so. I'm watching it real close today.
Okay, brother. Have a great one, man. Have a safe one.
You too.
Stay right there, folks. Tommy and I are coming right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And folks, if you haven't test drove the Nadex platform, come over to our website at TFNN. You can hit the banner, bring up the exchange. They'll put $25,000 of paper money into your account. And as you know, over the weekend, you can take a look at this. Monday, what does happen is that, you know, you have dailies. You have, of course, hourlies, and you have weeklies.
You do. And, you know, what we don't talk about a lot, and I know Darrell trades, and might check them out occasionally, is the 20-minute binaries on the indices, right?
Yeah, right.
And I know there's tigers in the den that trade those and like them a lot. They're just on the major indices.
Yep.
And they're every 20 minutes, and they're getting recalibrated, you know, as they open up every 20 minutes. So these, of course, it's, you know, 10:42. 10:43, and these expire at 11 o'clock.
16 minutes.
Yeah.
And 49 seconds.
Exactly. And so that's something you can check out.
I've
too.
traded those a lot.
Have you? Okay. Yeah.
What happens if you do trade those, folks? You're not going to be able to go to the bathroom.
They're only 20 minutes long, so
I know that, but my point is that when you
for sure,
when you trade them, you like trading them all day.
Every second matters too. If you're trading them for 20 minutes, of course, because you know what you really, some of the tigers like to do is you wait till 5 minutes, right? Because then there's less premium.
That's right.
You can get,
Well, I trade them when I know that if I get 3 or 4 hours and I'm not going to do anything else, you know what I mean? Say and you get some volatility in the marketplace. Then it's like, okay, it's pretty cool. There's no doubt about that, you know. And then of course on Sunday night, what does happen is that, and particularly, you know, the next week, you know, we'll see whether we get any volatility coming up. But because we are at highs, this is when, you know, I think the chance for big moves are there.
Sure.
You know, and, you know, I'm a bear, but the reality is if you're a bull, well, guess what? This thing could bust topside in a big way. We've really been at the same place since July 14th now.
Okay.
You know, it's like, okay, you know.
Yeah.
Because, you know, it's like, I can make the case you want to go down, but the other side of it, you know, when you're at the same place since July 14th, it's like, okay.
Yes, there could be some action, just waiting, building cause, right?
Building cause.
As you say, totally.
Building cause. And what happens, and this is what's always, like, really dangerous when you're a bear, is that I have never seen a market go down really good without a large spike before the fact.
Upward.
Yeah, upward. Sure. Exactly. Do you know what I mean? It's one of those deals, and and I've seen many stocks.
It's probably because it's at a time usually where there's a lot of volatility. Anyway, right?
Yeah.
So,
and you know, and then all of a sudden it's gone. I mean, not the volatility, the market.
Right.
Do you know what I mean?
Yes, totally.
Now, just the opposite happens really at lows too. Do you know what I mean? You know, you think you want to stay in, and then all of a sudden you get that last downdraft, and then all of a sudden it takes off and never looks back.
Yep.
You know?
Yeah,
it's
for sure.
Pretty wild, man. No doubt.
Let's take a look at some of the rates because bonds are rocking.
I'm telling you. They are rocking, and look at that, man. That's quite a movement today. So the 10-year, folks, is at 1.48. That was at 1.6 yesterday. That's how fast we're into 1.5 again. That's in the United States. The UK, you're at 0.5 of 1. France is at 0.1. Germany is negative 0.1. I know.
Wild.
Switzerland is negative 0.6. So you put money in the bank in Switzerland, it's costing you 0.6% every day. That's on the 10. Now let's look at the 30s. Look at the 30, Tom. That's unbelievable. So the 30-year, folks, is 2.2. 2.2.
Yeah.
For 30 years. They got a 10-year in there? They do. Okay, let me see the 10-year.
We're just looking at the 10-year.
Oh, sorry. Thank you. 5-year, man. Okay. 5-year. Okay, so 5-year is 1%. 1% to 5-year. Wow. You know, I really wonder why that, if they're saying that there's all this cash out here that's not being used, it's like, it's hard to believe that people are that worried that they keep their money in 5-year at 1%, right? But they I guess the
capital preservation is an important.
Yeah, it's huge.
You know,
I know. It's It's more important. Yeah, the market is saying that that's what everyone's doing.
Right.
That's the reality.
Yeah.
Pretty intense, man.
It is. It is. I agree. No,
that's
it's tough to wrap your head around.
It is. There's no doubt. And if we go over and we just look at that JDST again for Tom, he's getting movement right now. Yep. So this is, if we go to the GDX again, this is going to be dangerous inside this GDX because, you get 3 days of failures here. It's like, really? It's like, that's not me and you selling up there. That's someone that's pretty big that's unloading some equity. And it would make sense, because what does happen is this, folks, the run was so extraordinary that I can picture, inside the gold report, we sold about 6 weeks ago.
Yeah, you got to take in some profits.
Right, we wanted to take it. But if you didn't take it, and then all of a sudden you haven't moved in 6 weeks, it'll be like every weekend you're going home, it's like,
maybe now.
Yeah. Well, do you want to take the money, or you still want to keep that at risk when you're up the type of numbers that you're up?
Sure.
That's what I think is basically weighing on the equity part of it, And there's almost, right now we'll see whether there's going to be a disconnect between the equities and the physical, because the physical, is still hanging at that.
Pretty much hanging right where it is.
At that 1357. But Wrangell's coming down, and Wrangell's a large weighting structure inside the GDX. Royal Gold, Royal Gold not coming. It's coming off its highs, down 17. The largest weighting inside that GDX is Barrick Gold. And what happens with Barrick, folks, is this. This, I would say, is the most dangerous one. And this is why. When I say dangerous, it's because of the ownership. And Soros, who has always been a big gold guy, even when I started the gold report in 2001, he was in the gold market, him and his sons. And right there, he owns 1.6%, 19 million shares.
Sure.
Now he hasn't sold one as of the 30th. Yeah, but we don't know exactly.
But he would have had to file at the end of
6:30.
So
he would have.
Yeah.
And you can see what has also happened is that as of 6:30, though, Fidelity bought 17 million shares. So that's pretty intense. Now the intensity there, when I'm looking at that, is like, okay, well that happened, but it couldn't.
Swiss National Bank sold all their 12 million shares.
Oh, I got to see that again. 1 second. Yeah, because that's. Yeah, look at that. Interesting. So, watch this. If we do this, 11.9 million shares. They were sellers.
Bank of New York sold 4 million on the same filing.
And see, that's why I didn't have much movement there. Fidelity bought 17 million, but guess what? That's this is quite a bit of selling. Yeah. You stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. Dow Industrials right now down 16. Got the Nasdaq off 4. S&Ps are flat. We're going to be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. you get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Darrell Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. And of course, don't forget, coming up next, we get our man, Mr. Basil Chapman. And if you happen to be listening in your car, folks, don't forget, you can get us right on your cell phone 24 hours a day. You go to TFNN.com, hit Tiger TV. And Basil is going to be doing a workshop August 16th, which happens to be Tuesday, which is a mind blower.
We'll be halfway past through the middle of August and
isn't that crazy?
And pretty far through the summer, right?
Yeah.
I'm struggling to find so far. It's like, yeah.
And through the year.
Right, I know.
And
amazing.
through the year.
We're coming up on September. So yeah, so he's doing an event, new highs to come for subscribers to his opening call daily newsletter, and he'll be doing it Tuesday night from 6 till 7:30. You can sign up for a free trial right now, gain access to his newsletter, gain access to the event Tuesday night, and you know, he started talking to me that he wanted to do this about a couple weeks ago.
Yeah.
And yesterday, it's pretty awesome that we had all three indices at new highs, right?
Yeah.
So I'm sure I'll be in there and watching what he has to say come Tuesday night with some topical discussions.
No doubt. And so, folks, you can test drive the newsletter for a month. It's 6 to 7:30 Eastern Standard Time, Tuesday night. And if you can't make it live, you know, bottom line, we get some great technology. It'll be on your page for one full month, okay? So check it out right on the front page of TFNN. Of course, our man, Mr. Basil Chapman, is going to be coming up next, and then we're going to Thinkorswim headquarters, Chicago. Then Steve Rhodes, Dave White. I'll be back this afternoon.
And then it's the weekend, man.
And then it's the weekend.
And it seems like it's already the weekend for a lot of traders out here. With
you can see
market
it.
Just kind of relaxing.
You can see it in the market.
Whether it was gold we're looking at, oil, the indices.
Yep. 10:30. Well, you remember when
you do have bonds, the 30 years over 2 points, but you know, you're talking about a couple ticks here and there, all over the place.
Well, you remember when we were up in Boston, right? You had to get down the Cape.
I think you're already too late, man. The bridges are packed.
Totally.
They are.
That's
11 o'clock, good luck. Noon at the bridge.
Exactly. You know, so the bottom line, folks.
You better have some Dunkin' Donuts coffee and some donuts.
Yeah,
in
Dunkin'
that car
Donuts
with
Steve.
You. There you go.
That's right.
To survive that.
And particularly when you get closer to the end of the summer.
August completely.
Yeah, it's like, oh no. Oh no.
Because you get July and August, right? So that's 4 weeks go quick, and then you're into August, and everyone's like, man, I'm going down for the weekend.
Right. No doubt.
I'll come back to the market. At least, you know, when you can.
Yeah.
As in, right now, it seems like you can. You can take off.
No, there's no doubt.
And you couldn't in July, so.
No. And so, you know, what you do have here, you can see the market's kind of flattening out here pretty good, actually. That being said, except as you just said with those bonds, man, those bonds, we get free money, folks. It's
I love it.
You got to refinance.
Keep it coming.
Go do it. I know, man. We're all getting addicted, man. Isn't that weird?
Yeah.
We really are.
Lock it in, refinance.
We're
Get it done.
We're going to be in freaking shock, man.
You got to look at that from a risk-reward perspective, I think.
Yeah, you do.
Of locking in this type of a rate.
Right.
What's your opportunity cost if it goes lower, right?
Yeah.
Probably not much.
No. And what's
not to the average American, that's for sure.
No, there's no doubt. And guess what? If it goes a lot lower, well, guess what? 2 years from now, you can refinance again. You know, I mean, it's pretty wild, man. It really is. It's like I can't imagine being.
What's going to be next? Instead of 0% at 30 years, just like 0% at like 100 years for your mortgage? You know?
Maybe.
Yeah.
Yeah. It's like, how does that work? Well, how are they going to teach this in school?
Yeah.
It's hard enough teaching.
They're trying to figure that out right now.
Yeah, right.
They'll decide when they figure out how it plays out. Yeah.
You have to give people, let's see, I even have a hard time saying it. You have to give people money in order to lend them money?
I don't struggle as much with that one because they're providing a service too.
Okay.
They're providing a valuable service in terms of you storing it,
Yeah.
it's safe, you have access to it, you can electronically transfer it.
Yeah.
So there's some value. If they can't make money with the
Are
money.
you a consultant for the banks now?
Right, yeah.
Stay right there, folks. Basil's coming up.
Yeah, that's it.
Basil's coming up next. Have a great one. Have a safe one. Thanks, pal.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.